Hello there, you're watching Bizworld. I'm Anita. The National Tech Association of Malaysia, PICOM, expects salary growth in the digital sector for this year to be marginal at 0.1% and 2% for 2022 due to the MCO periods, economic uncertainties and job losses. In spite of that, the number of jobs advertised remained high, with the number of jobs advertised reaching 97,909 as at last June.
Do we have enough of demand to absorb all these extra talents and all that? So as an individual, we can do so much, but I think at the end of the day, it's still the industry, the government, and perhaps even the academician. I would say the three stakeholders are very, very important in trying to mitigate the risk of our people, our good people going overseas, traveling overseas because of job.
On the regional and global front, comparing Malaysian technology salaries with its peers, Malaysia continues to slide against Thailand with a multiple of 1.2 times, Singapore of 1.9 times, and the USA of 2.1 times. Meanwhile, PICOM expects a lower GDP growth for this year between 2% to 2.5%. While digital economy is expected to contribute 22.4% or over 330 billion ringgit to the national economy this year. About 64% of Malaysian retail banking decision makers said their respective companies are increasing spending on digital and engagement financial wellness initiatives. According to a study commissioned by Backbase, Malaysia recorded the highest figure in the Asia-Pacific region, more than Singapore, Japan and Australia. It added the revelation came from the submission of applications for a digital banking licence from Bank Negara. At the close of the submission date, June 30th, the central bank received 29 applications for 5 digital banking licenses, which are expected to be granted in the first quarter of next year. About 67% of consumers surveyed said they use their banking institution's mobile app, and 82% conduct their day-to-day banking via their smartphones. AirAsia Group's 500 million ringgit credit approved by Dana Jamin Nasional could provide some breathing space and leeway in ramping up its operations when interstate and international borders reopen soon. Public Investment Bank said the loan approval from the government is a boost to AirAsia's overall fundraising strategy to address its cash flow requirements. Along with a renounceable rights issue of up to 1 billion ringgit expected to be completed in December 2021, it said AirAsia will have sufficient liquidity and working capital. The 500 million ringgit club facility and other funding and monetization exercises would allow AirAsia Group to raise about 2.1 billion ringgit. AirAsia had yesterday received the approval from DNB for an 80% guaranteed loan of up to 500 million ringgit under the Dana Jamin Prihatin Guarantee Scheme.
A strong COVID-19 vaccination rate, allowing the government to reopen the economy with improvement in domestic demand and continued robust exports, putting policies in the right place. Former Treasury Secretary General Tan Sri Muhammad Sharif Muhammad Qasim speaks with Money Matters this Saturday at 5 p.m. only on TV3.
Back to Bizworld. Malaysia is expected to see a renewed interest in the Special Purpose Acquisition Company or SPAC listing moving forward. According to Deloitte Malaysia, one key reason is that SPACs are seen as a faster alternative in raising capital compared to the traditional initial public offerings, IPOs. There are also announcements made on a number of Southeast Asian technology-based startups seeking a SPAC merger in the capital market in the United States. In the first 6 months this year, Malaysia recorded 14 listings, of which 2 were on the main market, 7 on the ACE market, and 5 on the LEAP market. The current SPAC trust funds available in the US that are still searching for a viable business merger stands at about $114 billion. That's all the time we have for Bizworld today. I'm Anita. Thank you for staying and be safe.